Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the move up towards that 28.75 resistance ended up attracting responsive sellers, and as discussed in yesterday's recap video, we are dealing with a very volatile market. There's a lot of momentum both ways, and we are seeing some pretty large moves in both directions. And for now, we're simply in that environment where we're trading in a large sideways range, and we're probably not going to get real directional resolution possibly until even next week. So for now, we just have to understand that context that until the market breaks out of this big range, we're simply trading in it, and there can be movement in either direction. So at this point, heading into the open on the smaller time frames, we're going to be using the 05 to 07 area as the micro bull bear zone. And as long as the market is holding above that area, we know that in the short term, the buyers are more dominant. And if the market breaks below 05 to 07, that would indicate a short-term shift back to the sell side, and that would bring 95 to 97 quarter pre-market support into play, and 89.5 to 91.5. And then, of course, the key support in this entire range is down at the balance area lows at the 82 quarter to 84 quarter. But every zone along the way can still produce a reaction. It's very important in this kind of environment to be tuned into the immediate momentum in the market. And if you're going to take a fade setup, it's best to take it once the market gets a bit exhausted, or if it's hitting a important support or resistance zone. So on the downside, both of those zones are actually pretty decent, but 89.5 to 91.5 is obviously going to be the spot where the market would be more extended, more exhausted. 82 quarter, 84 quarter is the key support anyway. On the upside, 17 to 20 is important resistance, and if we take that out, then we're probably looking at a test of the overnight high and the 27 to 30 resistance zone. So in the immediate short term, 17 to 20 is still an area that can result in a potential failure. It would basically be a test of the overnight breakdown, and then if we take that out, then we're probably looking at a test of 27 to 30, and that's the next inflection point. Again, we can still get a reaction at 27 to 30, and in the event of a breakout above 30, we'll be looking at a move up towards the 35 half, 37, 39 half to 40 half, and then the final big upside objective would be 45 to 48. But at this point, that seems a bit out of reach. The 45 to 48. So far, the way the market is setting up, it doesn't seem like we're going to be hitting that level today, because overall we're still seeing more aggressive sellers in this market than buyers, and overall we're in a range, but when the market goes down, it tends to have more momentum behind it. Takes a little bit more time to come back up, and from what we're seeing, it's not really getting buyers interested until it really pushes into an extreme and pushes far below value, and then buyers step in. So it is a challenging market to trade, but at the same time, it's also a market that has a lot of opportunity if you are patient and waiting for the right places to get in. And you can't really be phased by taking one or two losses along the way. In this kind of market, you can get 4, 5, 6R trades pretty readily. So you really have to focus on thinking in long-term probabilities. And even if you have one or two losses, that's okay. When the next setup presents itself, that could be a 15, 20 point move. And if you're taking, especially if you're fading the immediate price action heading into a key support or resistance zone, even if you have to take one or two losses, those are really irrelevant. It doesn't impact the next trade, and that next trade could still be a key turning point in the market, right? So you still have to be willing to take that in order to really let your edge play out. If you take the first one or two and they don't work out and then you skip the third, most likely that's going to be the one that is actually the big move. So, it's a volatile market. You have to be a little bit more aggressive to get on board some of these moves. And in this kind of market, it's worthwhile to do that, just because the movement is pretty large and the ranges are pretty large. So once you do nail a nice swing, lower swing high, then you can hold that trade and get some pretty decent risk reward out of it. So at this point, heading into the open again, the immediate term bias was short-term bullish above 05 to 07, and already we've seen a move up to 17 to 20 as I was recording the trade plan. So you can see just how volatile this market is. The other thing is take the volatility into account and expand your stops a little bit so that you don't get stopped out prematurely, and then the trade setup works without you. So understand that in this volatility where we're seeing 40, 50 point ranges, the 2.5 point stops are probably not going to be ideal. You may need to expand it out to 3 to 4.5 points, and that's still okay because you're getting such big movement. You can still get 2 to 3 R out of those trade setups. So where it makes sense, be okay with expanding the stop a little bit as well. So those were the main ideas heading into the open. Let's see how we react at 17 to 20. That'll be a pretty big clue on which way the market is going short term. 05 to 07, key area to establish bias. And then if we take 17 to 20 out, looking at 27 to 30, next inflection point, can still get a reaction there. And then if we take that out, then we could get some more sustained buying. And these resistance zones along the way may not get as big of a reaction. Especially the 35 half to 37. We could just go through that and then test 39 half to 40 half, and then we have 45 to 48. In the event that we do get some extreme buying to the upside, refer to the support resistance zones text file to look at the resistance zones above. In the event that we do break out above 45 to 48, just look at that text file, download that, and you'll see the zones that are above 45 to 48, 52.75, 54.75, and the zones above there. So those are really the main ideas. Let's see if the sellers can still press off of 17 to 20. That is really the key area where they would have to press. And then let's see if 05 to 07 holds, and we'll take it from there.